We're live back at the TradeTech Europe 2022. It's been a great opportunity to see some old friends and make some new ones. We've asked several industry experts to share their insights and key takeaways from this year's conference on technology impacting the equities trading desk.
Absolutely machine learning. The use of AI/ML-driven automated decisions, particularly in a feedback loop from TCA, to really change the way that automation interacts with the trading desk.
Simplification of technology and simplification of solutions is the thing that a trader really needs. So how can a trader get the best information at the best time to make the best decision? And so I think the technologies that are really impacting the trading desk the most, and maybe not the traditional technologies that people have always had in terms of market data and order management, it's really innovative solutions that look at workflows and productivity and user experiences.
South Africa, and I'll really only speak to South Africa because that's my piece, is we've got a new exchange coming on board, so how do you arbitrage between two exchanges and smart order routers?
How information's being shared and sort of the interoperability of all the different softwares and UIs that a trading desk has. Historically, a trading desk has had 5 or 6 different screens, and the challenges around how do you deliver content to them in the right format from a plethora of data sources.
What we see as an exchange from the Johannesburg Stock Exchange point of view is that most of the trading desks in South Africa are beginning to implement algorithmic solutions, specifically FPGAs, because that's what the next really iteration of low latency trading technology that is driving the market.
How we automate that whole process and automating that whole onboarding and connectivity piece, I think, is going to be a big trend over the next few years.
It's become less of a report-based setup and more of an actionable live setup. So what we've done and what clients want is the ability to see TCA live, pre-trade, and then make decisions based on it, but also make decisions based on it intra-trade. So you need two things, essentially. You need, well, first big thing is data. Obviously, you need all the tick and you need all the market data to enable you to do that. But also you do need some smarts to be able to look at my trading style and how that will be recreated on the TCA analysis.
The benefit of TCA is it's giving firms the ability to have the real understanding of the costs associated with their trading, which again, they're able to align against the infrastructure. So if there's particular markets or geographical locations or asset classes where the TCA is now able to reveal whether or not they're worth pursuing, they're worth investing in, or worth scaling back in. I think that's where TCA has really kind of helped firms from an infrastructure perspective.
We're seeing a lot more buy side in South Africa using TCA, and that's obviously influencing their decision making and choosing which sell side broker to execute through. And we love it. We think it's great because it takes out that biasness of whether somebody's your best friend as a firm and giving them the business. And now it boils down to actual data analytics making the decisions.
I think one of the new areas is new asset classes, and everybody's talking about asset class such as crypto. And so the ability to be able to trade and find liquidity in those types of assets, I think, is something that the market needs.
TCA, we believe that the trading desk in South Africa should invest in that because it's clearly going to increasingly become a major talking point between the sell side and the buy side in terms of proving best execution.
AI/ML is the obvious answer, but actually before that, people need to really think about improving the infrastructure, the order management solutions, and the data architecture. It's enabling machine learning that's really the priority for businesses at the moment.
Get your solution delivered quicker. So any forms of automation, any forms of depending on what you want to achieve. So being able to spin up an infrastructure quickly, being able to connect to new markets, onboard new clients, anything that can make that simpler for organizations so they can be quicker and they can get running quicker. I think that's where I would be choosing to invest in those technologies at the moment.
I think AI has been a huge game changer in the trading space, in finance in general, because we collect millions of trades that we can digest through ML models to create predictive models for routing orders, for pricing, and to achieve better execution quality, and in final, to achieve better prices for our clients.
Lots of people look at AI and machine learning in different ways. Some people apply it for stock selection, and so looking at big data sets and trying to identify alpha within really difficult data sets, so crunching big data. Other people use it in strategy selection. So on the trading side, how historically have I traded this instrument? Can I trade it the same way? Can I learn from how I've done it before? And can I take that pressure away from a trader and automate that to a certain extent?
We can perceive data and we can spot patterns, but we can't do that in vast data sets. As we automate the technology to recognize those patterns across much bigger data sets than we're able to perceive, we spot new patterns. And those new patterns will allow us to make better trading decisions.
We've absolutely employed machine learning techniques and what we call robotic process automation in detecting market manipulation issues or risk monitoring issues or algo monitoring issues.
Firstly, on the APIs, making sure that the APIs are flexible, they can take in information and pass out information that the clients want so that their automation can occur wherever they want. Within the systems themselves, we have automated rules-based trading, so where clients can preset rules based on how and when they want to execute those trades, and that sort of brings the automation in-house.
We've done some automation in terms of trading for our high-touch desk when they want to do block trades, and then on the quant side, it's just on the alerting side. So it's continuously improving, and automation will always be there.
For us, automation is now fundamental to every part of the technology that we're developing. Whether it's pre or post-trade, whether it's in the OMS or in the algos, we understand that there's no part of the OEMS technology that doesn't need to benefit from automation.
It's absolutely fantastic to be back at TradeTech 2022. This is almost 3 years since the whole European equity trading community has come together. We have over 1,200 attendees here today, and the anticipation and excitement of getting back together and meeting each other and networking is overwhelming. We also have the busiest agenda that we've had, from everything from the macroeconomic drivers, the Ukraine-Russia war, all the way through to the cutting technology, AI, ESG data, crypto. All of the major topics that are driving change in the industry have happened here today over the last couple of days. Cannot wait for 2023.